Get ready for an unforgettable night of glitzy glamour and good fun. The Posh Gala Ball is back at Cancer Council New South Wales' premier fundraising event. This year, you'll be transported to the breathtaking Amalfi Coast for an evening of elegance and great entertainment. Join us on Saturday, May 17th at the Fullerton Hotel for a night of fine dining, dancing, and over 100 extraordinary auction items to bid on, from luxury escapes to coveted Wimbledon tickets. Hosted again by the incomparable Vince Sorrenti, it promises to be a night like no other. With nearly $23 million raised since 2000, Posh continues to help make a difference for all people affected by cancer, and your support makes it possible. Be part of the magic and grab your tickets now at cancercouncil.com.au/posh.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, good day, everyone. It's Liam Garman here, Managing Editor of Real Estate here at Momentum Media, the team that brings you real estate business. And I'm in the studio today. It's good to be in the studio, get to speak face to face with someone who, gosh, I think our entire audience would know and would be very familiar with. And I'm talking about the one and only Tim McKibbin, CEO of REINSW. Mate, welcome.
Thank you.
To the studio.
Yeah, great to be here with you.
And this is our first podcast together.
Yes, I don't know why that is. We've been passing each other obviously along the way, but I'm glad I'm here.
And I'm glad you're here because we have so much to learn for you. And this is actually going to be the first part of a two-part series. Mm-hmm. So I'm going to do a teaser for our second episode. And in this episode, I'm going to get some of the top line statistics from you about what's happening in the real estate industry. I'm going to guess we're going to be focusing primarily on New South Wales, given that's your remit, but maybe we'll go a little bit further. We'll see how the conversation evolves. But the podcast after this, which will be released in about 7 days' time after the release of this podcast, will be focusing on that agent education and what are the changing regulations, the changing legislation that agents need to know, as well as some of that professional education. So for our listeners, do stay tuned for that. But Tim, it's been a pretty big few months in the world of real estate. We've had our first interest rate cut. We've had predictions of a few more interest rates down the road, especially maybe with a slowing down of the share market. Maybe it will expedite more interest rate cuts. It remains to be seen. We've also got an election, which a lot of people are calling a property election, given how many eyes are on supply. I'm going to ask you the broadest, most general question. How are you finding the world of real estate? What do you make of the last few months?
Yeah, it's an interesting question because, I mean, watching the share market like everybody else, and you see the volatility in that, I think the other day it dropped by 4 or 5%. You don't see that in property. Property doesn't move that fast. So I think it is one of those things that attracts investment because of the security that comes with it. Mm. And obviously the share market doesn't bring that with it. But I'm curious to see whether or not as the share market and some of the other markets go into this very unstable area, whether or not we'll see money coming into the property market, just even if it's just parking it there for the short term. The uncertainty coming out of the United States and what it's doing right across the world, I think is I hate this word, but it's sort of unprecedented with these sort of tariff wars that have been instigated.
It is interesting because you can't necessarily look into a crystal ball and predict what the future will be. We've been for decades, on that geopolitics side anyway, we've been in a very predictable stable of global events. Turning to your point earlier about the stability of the housing market, I was only reflecting on it a few weeks ago, which is we've seen so much volatility in the share prices and in the share market. Why have we not seen the same volatility in housing? And I think at the crux of it, because in Australia we have such stringent serviceability requirements that we've put on our banks and on our lenders, we're immune. We're not immune, that's probably not a good way of putting it, but we're more protected when we're buffered from those huge drops and increases in housing prices like we saw in the 2008 house prices in the United States. Looking forward, if there is some element of global vicissitudes in the global economy, the ups and downs, Is there a risk to Australian house prices?
Look, the future is never something I've been willing to talk about too much.
Of course, I know.
But and that's a coward's way out. But what we do know, if we look over our shoulder, that property in its history has never dropped over a 10-year period. So you'll get property moving. So even if you go back to the GFC and the like there, if you look at any period of time over 10 years, it's always gone up. Sometimes it hasn't gone up much, sometimes it's gone up a lot, but it's always gone up over a 10-year period. And I think investors do get a lot of comfort from that. And it's one of those assets that you can go and see and you can touch and these sorts of things, whereas if you're looking in the equities market and options and some of those other derivatives, when you're looking at them, they, in many respects, whilst they have value, and I get it, but you can't go and touch and feel it. So I think a lot of people see property as a very solid investment. It always was called bricks and mortar, wasn't it? And I think it's always attracted that sort of security and comfort for people maybe making their first investment.
Absolutely. And you know, we've got AusBiz that always runs in the office, just in the background on the TVs. And you see it all the time where it's like you're going back 5 to 10 years on some of the equities and there's just a cliff and it's still down and it hasn't recovered. So your point about that long-term growth in property, that you will always overcome that short-term volatility. It is a long-term game in the end. Now, looking at what we're seeing at the moment, in particular in selling and buying behaviour, what are you seeing in terms of that economic behaviour now for buyers and sellers, and what does it tell us about the market? Yeah,
sorry, I'll just pick up on one point you raised a second ago. You said to me about the share market. One of the things that I'm working on currently, and I'm quite excited about it, is to that ticker tape. So I was walking down Martin Place one day and I was watching all the share prices go past on that ticker tape they have up there, and I thought, why don't we do that for property? So we're building a solution now, and it's in test, and it's quite interesting because as the data is coming in constantly, we're looking at the medium house price in a suburb, and it's moving up and down by $20, $50, this sort of stuff.
Yep.
So, you know, nobody's going to make a decision about it, but it's just really interesting as the data is coming in, those little movements that are happening on a daily basis. So I said to you, it's not volatile, but it's certainly, there's certainly movement in there.
So you're expecting to have like the scrolling?
No, it will. It's exactly what we're doing. Yeah. So we'll be giving that to our members so they can select their suburbs and let it roll along the bottom of their windows out the front, so people can.
Fantastic!
Yeah. So you'll be able to do that for rentals and the like.
So really, like that brick and mortar, your actual storefronts will be able to do it as well.
Yeah, so you'll, as a consumer, you'll walk along, you look at the agent's front window and you're looking for a rental, and you'll have the 3-bedroom rental, and the median in this suburb is blah.
It is an interesting point, and I think it is for our listeners, for a lot of franchisees that might be listening. I think that's going to be a great marketing hook and a great opportunity for you to speak to potential vendors. I find a lot of the time, dollar figures are they're kind of intangible unless you're looking to sell, unless you're looking to buy, unless you're in property day to day. For a lot of people, it's just a figure, you know. And if we look at it in the election, where if I said to you, Tim, here's $1 billion for this, you'd be like, okay. You get to these points where you can't actually understand what's $1 billion versus 100 million. It's just figures at the end of the day. And I find that speaking to a lot of older Australians as well in terms of the housing affordability, and this is something that we'll speak to later in the episode, but in terms of housing affordability, how many older Australians genuinely don't know how much their house is worth.
Yeah.
And they genuinely don't know how much his house is worth. And I'm sure there are going to be a lot of places across Sydney and across New South Wales, if someone's walking down their local high street or whatever it might be, or in a Westfield, and they see that rolling price, I reckon some people would be shocked and they would not know.
Yeah, that's right. And you're talking about numbers and all the zeros hanging out the back of it. It's interesting, when I was a little boy 1,000 years ago, when you said, so-and-so's a millionaire, and that meant something. But now everybody in Sydney that owns their own home, they're millionaires.
Oh, absolutely.
And that's where it's gone.
Yeah. And by almost default. So what are some of the trends that you're seeing in buying and selling behaviour at the moment?
Yeah, as much as everybody tries to talk the market down, it continues to be quite strong. We're seeing each month solid performance. I like the auction market, and I get a report on Sunday morning to see the clearance rate. So we're looking at clearance rates in the low 70s now. Sometimes it does a little better than that. The numbers of auctions is pretty strong. I'd say it's a traditional market, if that has if there is such a thing right now. It's just ticking along. All those doomsdayers a few months back that said it was all going to hell in a handbasket when it dropped 0.something%. So it's chugging along, and the reality of it is that we live in a supply and demand market. Now, there's so much smoke and conversation around this property, but in the end of the day, it's like any other market. It's supply and demand, and right now our demand is higher than our supply, so it's going to put pressure upwards on the asset.
Looking at that, you mentioned the 70% clearance rate figure, and you made that point where we're kind of in a different era. A few months ago, there was a bit of doom and gloom about it, but now everyone's kind of back to normal. Turn back the clock 5 years ago, and I know a lot of people, especially with COVID and lockdowns and the threat of a recession, a lot of people were completely worried that asset prices would just be wiped out across the board. What does 70% look like historically?
Yes, as I said, it's probably a traditional market.
So it's just kind of it's to be expected.
Like I said, if there is such a thing as a traditional market, then I'd say that's about right. People are going to an auction. They're going there to sell their property, and if the offer at the auction is close enough or exceeds the reserve, then you normally get a deal. Obviously, if it exceeds the reserve, we've got a deal. But if it gets close, you can bring the parties together and do it. So 70%, I think, is a traditional market. When we're seeing high 80s that we saw probably 2 years ago, when we saw high 80% clearance rate, that's a very hot market. And when I'm seeing figures in the 50%, well, clearly the market's cool. So that around about 70%, I think, is 70-75% is a traditional market.
It's stable. You've
got willing buyers and you've got willing sellers, and they're coming together. Yeah.
Now, looking at this, I don't think there's many people in New South Wales that would necessarily have their finger on the pulse like you do in terms of speaking to people right across real estate and right across property. What's the sentiment at the moment for buyers, vendors, the industry?
Look, I think buyers are struggling to raise the cash to get in there, and I've got first-hand experience of that with my kids. I've got 3 kids, and I know they're trying to get into the market. A couple of them were able to do that, but it's hard. When you've got a median house price over $1 million, and even in the unit market, I mean, what's that, 800,000 or something along those lines? So it's a huge sum of money. People often say, oh, the kids today, they want this and they want that. The reality of it is, though, that when I was looking to buy my home, it was 7 times the average annual salary was the cost of a home, 7 times. Now it's closer to 14. So it's not the kids today, it's just the prices have gone through the roof. So I have an enormous sympathy for first home buyers trying to get into the market, making that enormous leap from nothing to everything in one go. So I unfortunately, and you did go to this issue, it's about supply. We just need more property. And as you also rightly pointed out with the election now, that it's all over the place where people are talking, they're saying, I'm going to build this and I'm going to build that. I mean, neither party is going to build any properties, not a one. And, well, maybe some social housing or something like this. So this 1.2 million they're going to build, that's going to be done by the private sector. It's not going to be done by government. And for them to be suggesting that they are doing it is just, patently wrong. But that's what we need. We need a heck of a lot more property. I'll give you some stats, though, about in the rental market.
We love stats.
I do. I'm going to try and do it without my glasses, but that means my arms may not be long enough. And I always like to say, there's an old accounting expression that says, numbers don't lie. People lie, not numbers. And the other thing I'd add to that is understanding data. You'll often see people that will look at data and not understand the message that it's sending them. You know, you and I go to the footy, for example. We all agree on the score. Your team wins, mine loses. We see different things that happened on the day, but it's the same data.
The refs on your side, mate. Yeah.
Well, that's right. So let's just I've been tracking the number of rental properties in New South Wales since the 30th of September 23.
Okay.
So there was 966,172 rental properties in September 23. Now, at the end of March 25, there was 977,756. So over those 19 months, we've gone up 11,584 properties in 19 months.
But population growth would have been 300. I don't know. I'm guessing.
No. Well, again, another really good question. So it's been 291,327.
I was very close.
You were.
I was within 1%.
Yeah, very, very close, actually.
Oh, 3%. Yeah.
So, you know, you've got an extra 11,500 properties and an increase in our population of 291,325.
Yeah.
So, you know, you can look at it in different ways. It's 610 properties a month on average, all right, and 15,333 people a month. That's the net gain in New South Wales population. So those numbers kind of yell at you. They don't speak to you. They yell at you.
Yeah. Like it almost makes me wonder, and that's not including houses that have come off the plan that have been built or new units have been built.
No,
and moved
these are rental
pure
properties.
rentals.
So with rental properties, obviously not every home that is built is sold into the rental market, and that's a topic all in itself, isn't it? And right now we've discovered that a landlord is going to have to accept pets in their properties. They're going to have to accept 4 animals in their property. They can take that off to NCAT and say, look, I'm not prepared to have 4 animals in there because of the circumstances of my property. And, you know, get extreme here. You might want 4 horses and you're in a studio apartment. Yeah. I mean, that's not going to work. So
seems like a reasonable complaint.
Yeah. So, I mean, there's all of these things that are going to happen.
Yeah.
And also making it difficult for the landlord to recover possession of their property. So they're going to have to give reasons now. If they want their property.
What does that final reason mean?
If you wanted as a landlord, if you wanted your property back, you would have to demonstrate to the tenant in the property with evidence that you had need of that property yourself. Okay, so you would be saying, look, I'm going to sell the property, and you'd have to provide some evidence of that, or you want the property back for family reasons, so you'd be required to provide evidence in support of why you want the property back. So, you know, and without going into, you know, all of the things I think that I've seen in my 20 years at the REO, all of the erosion of landlords' rights. But the point that I would make is that you're not going to get more of something by making it unattractive.
Yes, of course, if you make it more unattractive, you get fewer people putting their money into property to grow those number of rental properties. Yeah. And this is the age old discussion when people scapegoat landlords. Clearly, with your example and your data, there's actually not many more investors.
No, and I'm very concerned right now that what we're going to see is quite a lot of investors exiting the market. They're going to say, I don't want to have my property destroyed by pets. Now, whether or not that's a genuine fear or not, it's up to the individual. But I think we will see people starting to exit the market. And the reason I'm somewhat confident about that is I'm looking at what happened in Victoria, and that's exactly what happened there. I've also written to the Attorney General, I'm getting a little bit off point here, but I wrote to the Attorney General late last week asking him to provide NCAT with more resources because, again, what we saw in Victoria with the same legislation is the call for VCAT services went through the roof. And there was something like a 25-week delay in getting your application onto into VCAT for disputes. So that's going to go through the roof. But I would say that we have to be careful with demonising landlords and treating them as an infinite commodity because you have to remember that before there's a tenant, there's a landlord. And before there's a landlord, there's an investor. And as an investor, I can put my money into the share market, into fixed interest, my superannuation, offshore, commercial property, holiday and short-term rentals, and do all that. I don't have to put money into residential rental market. And that's the bit I think that eludes everybody.
Of course.
And also what troubles me is all this tenant-friendly media, or I should say political position that government's taking. And that kind of is, in my view at least, is to elevate government's standing in the rental community with tenants. And at face value, that looks great. I can have a pet. I can do this. I can do that. That only means something if you can get a rental property.
Yes, yeah. If you can afford one.
If I'm out in the street and I haven't got a property, having the right to have a pet in the property doesn't mean very much. And so I think a lot of this stuff that's coming through now, at face value, might seem good. But I think the big loser out of this will be renters.
And I very much appreciate the way that you've approached the affordability discussion, both from a first home buyer's and a tenant's perspective, because it's quite uncommon in the world of real estate. When you came in and you did the maths, it was houses used to be 7 times the annual salary, now it's 14 times. In real terms, it is getting more expensive, and you can't make up 14 times the median house price, 14 times the average salary by the old adage of cutting out your lattes and your avocado toasts. That simply doesn't cut it.
No. So that's my point. And I feel very sorry for the first home buyers these days. The kids like my kids trying to get into the market, or the young adults, I should say, trying to get into the market. It's very hard.
And you've kind of that's very reasonable. You've come in and you balance it and saying, well, then on the flip side as well, if you have before maybe you buy your first property, or if you're moving house, or if you're moving interstate, or if you've just come to Australia, you're going to have to rent. We're acknowledging that your rent is going up so much. Well, there's no new rentals. It is really that simple. I mean, this is economics 101. This is something that you learn on day one of your finance degree, where you get your supply demand curves up and you find the equilibrium. This is a perfect example of it. One thing I liked as well about what you said is looking to Victoria, because we hear really often about some of the, I've got to be careful with the words I use, suboptimal policies that have come out of Victoria in terms of real estate. When you look at the Victorian market, is there anything else that you're taking heed of? Anything else that you're looking at and saying, hey, this is no bueno, we don't necessarily want this in New South Wales?
Well, that is what we've done with the rental market, certainly. And for that matter, up in Queensland, we've had a look at that. And I've been having a look at some of the cases in VCAT, so the equivalent of our NCAT and QCAT, obviously, in Queensland, having a look at some of the decisions that have been made. And again, really interesting challenges for people. So I wouldn't have the ability to make a determination of what is reasonable. And the word reasonable is used all the way through the legislation. And it says, is it reasonable to have this particular animal on these premises, etc.? Now,
the horse studio example.
There you go. Yeah. So, is it reasonable? And whilst it says that in the legislation, I don't feel like I would know the answer to that. I doubt that many people would, but we're going to give it to NCAT. We're going to say to the NCAT member, you decide whether it's reasonable for this creature to live at this property. And I think you're putting a lot of pressure on an NCAT member as to whether what they would need to know about the wants and needs of an animal.
Now, you've got your stats in front of you. Now, I don't know if you got a stat on it, but presumably, going back to the rental argument discussion, presumably vacancy rates are just non-existent.
Well, that's right. They fluctuate between about 1 and 1.5%. So I put that in the same category as when government says to us, well, we've got an unemployment rate of 4 or 5%, and that means 100% employment. They call it full employment when we've got an unemployment rate so low. I do the same thing here. When we say we've got a vacancy rate of 1%, 1.5%. That is just those properties.
They're just turning over.
They're turning over. You know, you really don't have any property in the market, as far as I'm concerned.
Yeah, and I think that's very reasonable because that's just your regular, what's the word, like your regular transaction. You know, someone
moves out, someone moves in.
out. That's it. They move for work, or they buy their first home, or which creates that really what would only be on the market for a few weeks. So looking at all of this, there is a big focus on supply, but have we, as a nation, right? Have we as a nation really diagnosed the full problem behind housing? Is it just supply, or what about the other issues? Planning, construction capacity, investor confidence. How do these factor into the equation?
Look, I have to congratulate you with that question because the cop-out, and we hear it all day, every day, don't we, that it's supply. And whilst I agree with that, we have to look at how we got to this problem, and we have to go and investigate, I think, a more granular sense about the journey. Because if we go back 30 years ago, we didn't have this problem. You know, there was houses, people were buying houses, but over time, the problem has crept in, and it's getting worse and worse and worse every year. So I think we need to go and investigate that before we get into the solutions. Understand your problem before you start to design a solution. Now, I'm not saying that supply isn't the answer. I think it is. But I also think that we need to drive supply with the benefit of fully understanding the problem. But the things that are out there that I identify now, with a new property, and this is something consumers don't know. So if you're going and you're buying a brand new property off the plan, there you are. And so I can do the numbers in my head. It's $1 million. All right, paying $1 million. $400,000 of that $1 million are government taxes and charges levied across all three.
40%?
40% plus. $400,000 of what the consumer pays for a new property are government taxes and charges. Wow.
Was that always the case, or are a lot of these being built up over time?
I don't know the answer to that, whether it has always been the case, but we've always had things like stamp duty.
Yeah.
And for that reason, I think that's always been a contributor to it. But right now it's 400,000. Now, something buried away on the Office of State Revenue's website, I'll give you a couple of so in 24, at June 24, the 12 months ending June 24, government made $11,483,844 in revenue. And so far this year, so for the 9 months, it is $9,381,581,944. So it's an inordinate sum of money.
And that's from property?
That's
overall?
No, that is just stamp duty.
Oh, wow.
You got land tax on top of that.
Yep.
All right?
Yep.
And I've always viewed land tax as paying rent to live at your own property.
Yeah.
But that's just stamp duty.
It is funny, the stamp duty argument, because I only bought my first property a few years ago, and when you do live in a world where I think the median house price in Sydney actually only this week, the median house, not overall dwelling, but for a house, I think it just clocked in at $2 million this week. Now, obviously, you're not going to be buying unless you've got very generous bank of mum and dad with very good lending rates. You're not going to be buying a $2 million place. But even if it is the mill, and I can't do the maths on the stamp duty on that, it is so fundamentally excessive that it actually does determine whether you can or cannot purchase a property anymore.
Yeah, it's 400,000.
Yeah.
And government will say to you, no, that doesn't impact affordability. That's rubbish.
Of course it does.
It's got to impact affordability.
Yeah, of course it does.
So, but they're not about to reduce that.
Well, because they're addicted to now it's a revenue thing. Now you're actually fundamentally challenging the government's bottom line. If you do have if you do have concepts which mean that they can't collect as much tax receipts.
Yeah, and look, I'm a realist like everybody else. Government needs money to be able to function, the hospitals and all the rest. So I accept that. I'm not saying for 1 minute that we should get rid of stamp duty and deprive government of its funding to deliver its services. That's ridiculous. But what I am saying is we need to have a sensible conversation in this country about taxation. Now, things that don't get taxed at all are the share market. So I can buy and sell shares. I don't pay council rate to my shares. I don't pay land tax equivalent on my shares. I don't pay stamp duty on my shares. It's free of those things. Yet the roof you put over your head, it gets hit with everything. Now, again, property home ownership is important in my view. And so home ownership builds wealth. It builds communities, and that's something that we should be pushing hard as a country. And now, if we step away from tax and we get into planning, I just think that councils are the wrong vehicle to be involved in planning. So there's too much politics at a local council level.
Yeah.
So councils to me are roads, rates, and rubbish. That's where they should play. They shouldn't be in the planning area.
It is amazing, like when it's local council election every 4 years, and it's every candidate's campaign's on a stopover development platform.
Yeah.
It's every candidate from every party and every independent across every council in Sydney.
So we have to, again, as a state and as a country, look at this holistically and not be influenced by minority groups in particular areas. I mean, there was an acronym came out that said it was CAVE, C-A-V-E, which stood for Communities Against Virtually Everything.
Yep, I can see that. Yeah.
But that is not a responsible position.
Yeah.
We have to, as a state, take a responsible position here. And I think what is responsible is building and encouraging development of properties that are close to transport routes, so close to railway stations and these sorts of things, and give a solid reason for somebody not to own a car. And I think that is where we need to be headed. We talk about these vertical villages, which I think is a fantastic idea. You can have very high quality, higher density living, and that's where we need to be.
And some of them look really
headed.
good. I've gone around Crow's Nest and St Leonard's, and some of the developments up there are really good in the way that they've done it with the village down the bottom, and you've got your Harris Farm and the salon and this and that, and it kind of is a little bit more of a community feel, and it's not, especially when you're in that little plaza kind of area, you're tucked away from the noise. It's not really loud, so there are ways of doing it and doing it well. Yeah,
there's some really clever developments out there where you would over the top of a railway station, and as you rightly point out, you've got your Harris Farms and the like down the bottom, news agents, etc. First floor, you've got your professional people, doctors and dentists and co, and then you've got your residential and
actually there are a few more examples of that in North Sydney around the new metro. And they're beautiful buildings as well. Yeah.
And if you look inside some of these properties, some of them are, I'm not quite sure if this is how you say it, but they're 2-story, and there's they've got these staircases inside where you walk up around. There's a balcony. They're incredible buildings. They're beautiful, and then the building owns motor vehicles. So that if you need a motor vehicle, instead of having one parked in the car space downstairs, you would go and book your motor vehicle that's owned by the building. So it becomes a property of the strata.
Wow. I've not heard of that. That's a very unique concept.
Yeah, so the thinking is you don't need to have your own property, your own car. You don't need to have your own backyard. They're all shared facilities. So you want high quality facilities for your outdoor recreation, high quality access to motor vehicles and these sorts of services, but you don't need to actually own it. And some of the infill that I think we need to be looking at in this city should be a priority for us. It is not healthy for people to be travelling 2 or 3 hours each way each day to get to work. We've got to build property where people work.
Now, how do you find what is some of your feedback, if you're allowed to say it? I also understand if you might be in a little bit of a bind, but around some of the planning reforms at a state government level, what do you make of that? What's your policy?
Yeah, well, and again, I always say that we have to be looking to build intelligent properties that meet the needs of the contemporary consumer. Now, again, if you go back 1,000 years when I was looking to get a property, we all had the same one. It was the cookie cutter property. It was a freestanding quarter acre block, and we all had that. But now, not so much. People have special requirements. There is no one size fits all as there was, which is a good thing. And as a consequence of that, you've got to understand your market better, and you've got to be able to build property that responds to your customers, to your consumers. Yeah. But with when I talked about the 40%, I said to you, we've got this 40% cost inflating the cost of property. Some of that is tied up in the delays that happens with the planning approval process. Yeah. You can regularly take longer as a developer, to get council to say, yes, you can do it, than it takes to build it. Now,
classic. Yeah.
That there is something fundamentally wrong with that.
Yeah.
Fundamentally wrong. And I think what state government should do is say to councils, you have the planning authority, use it wisely, but use it. And if you don't, we'll take it off you. So the outcome here is in your hands, the outcome here. I had developers over the years who've said to me that they put in a development and the council has said to them privately, look, we actually think this is really good, but we can't support it because politically...
We've got an election in 6 months.
Politically it's just not... So what we'll do is we'll say, no, you take us to the Land and Environment Court and we'll roll over. So the Land and Environment Court is becoming...
Takes the blame.
Well, the Land and Environment Court's becoming the consent authority. Rather than council. Now, I'm saying it's an isolated case, but there's too much politics.
Well, is it that isolated? I mean, that is an isolated case where they might have used it as the justification, but I don't necessarily think it's isolated where you would have local councillors that would not genuinely have any problems with a certain development, but they would vote against it for political expediency.
Yeah. I mean, absolutely. If you've got your, as you pointed out earlier, didn't you? You said everybody stands on a platform of no development.
Yeah, literally everybody. I've never seen someone say, "Hey, development's going to happen, so at least I'm a safe set of hands to make sure it's done well."
Yeah, yeah. And this is again, this is what council should be saying. They should be saying, "This is the development that we want to attract to our area."
Yeah.
And then when the developer comes in and says, here is what I want to build here, give it a tick, get it underway.
Yeah.
But when it's taking, as I said to you, longer to get a yes than it does to build it, this is part of our problem. So our two biggest problems are tax and the building delays. Now, the next thing I think that's happening also is the cost of materials, which are since COVID, and the tradespeople, there seems to be a shortage of that as well. So it is now a multifaceted problem and it's getting worse.
Absolutely. Now, I understand that you're a very busy man, Tim. So you're a very busy man, Tim. So understanding that we've also got a podcast coming up next week as well. So I think that is all we have time for today. Thank you so much for joining me, Tim.
Thank you. Great being here, Liam.
That was Tim McKibbin, CEO of NSW. And if you want to get in touch with Tim, I'm going to offer it out. Reach out to his team and he'll be more than happy to have a chat with you. And that is all we have time for today on the REB podcast. But until next time, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Thinking about refinancing your home or investment loan? Finny Mortgages makes it easy. Our team of expert brokers handle all the hard work, finding you the right loan at a better rate. Book a free no-obligation call today and see how easy refinancing can be. Visit finny.com.au or call us at 02 8866 2444 to speak with an expert.